Investments in securities are subject to market risks. Read all related documents carefully before investing.
Hello and welcome to the Weekend Investing Daily Byte. We are shooting this episode on 18th of May. The purpose of the Daily Byte is to go over the market's moves, how each sector is performing, get insights into various aspects of the market, and also discuss some topic in particular on a daily basis so that everybody's knowledge and information keeps enhancing along with us. So today's topic for the day is whether you should sell out in a panic. The market seems to be in a small panic right now, uh, and we've seen that new players in the market, new investors in the market get very jittery. So we'll talk about how panics need to be addressed. Uh, First of all, let's look at the market. So markets opened with a gap up almost 100 points higher in the first few minutes, and then entire day it lost about 200 points from the top, closing at 18134. So all the hopes that yesterday's fall was a one-off have been belied. Uh, it is now very clear that the very short term momentum and trend has turned down, and the medium and long term trend still, long term trend is still sort of sideways, I would say, but medium term trend, it continues to be on the longer side. The short term trend has definitely broken down, and today was the testimony of that. A very classic response study on such days is that when you have good results coming out better than market expectations, yet market beats them down, that clearly shows that market is right now not in a mood to go up. So whether it was a result of ITC, whether it was a result of State Bank of India and several other stocks, market did not pay heed to that because the overlying impact of the dollar index, as I mentioned in previous episodes, is weighing very heavily on the market, and all emerging markets, India and other markets, all precious metals, everything is coming off because the dollar is becoming a wrecking ball again. Nevertheless, I mean, we've come quite a far distance since last 6 to 7 weeks. So some profit booking is all right, not an issue. I think even if we were to climb down to 17,800, the trend would remain intact in terms of medium term for me. But immediately, I think maybe once this gap is covered, we may get a bounce here. So not really a sign of any panic as such. The screen you can see is all red. Very few greens or sideways moves. ICICI Bank, Kotak Bank, Bajaj Finance were some stocks that did not fall. ITC and State Bank, both with decent results, better than expected results, fell about 2% each. Levers 1.5% down. Maruti, Mahindra, Tata Motors, Titan all down, along with Eicher Motors. And power stocks and cement and steel stocks are also down. So pretty much across the board, good selling. Reliance remaining a bit flat, and you can see that all sectors down, with real estate and PSU banks, which had run up recently, also smashed down today. Private banking was the only space, as I mentioned, which had some green on it. So a reasonably big down day. Autos, infras, FMCG, everything down more than 1%, and the bullishness that had come around in the market has been, at least put to some rest with this move, and bears seem to be in short-term control of the market right now. Mid caps also giving up some of the gains, although I would say, the give up on the gain is just 1% or 2. So mid caps haven't really fallen down as much as Nifty. Small caps also haven't fallen down. Just see, small caps have not even broken a 2 day low. So small cap rally, I would think, is very much intact. But Nifty, because of FII selling, I would think is bearing that brunt of that sale. Nifty Bank, if you see, this is an hourly chart. I should have shown you a daily chart here, but Nifty Bank also is very much intact in terms of its recent trend. So there is really no worry on this front also. So it is mainly a concern of the very large caps on the Nifty, and the small caps and mid caps are doing quite fine actually so far. The US dollar index, as I mentioned, is the primary reason why some knockoff is happening, and this is strengthening from 101. It has strengthened to 103, and looks like going up for now. So the topic of the day today is, should you indulge in panic selling? And let me also say that I will take up your questions in the last 5 minutes. So please do send in your questions if you have. Uh, should you indulge in panic selling? So, uh, a lot of newcomers in the market, or even people who have been around, take the markets moves very short term moves very seriously, in the sense that if you have to see what is the time frame that you have come in the market, what time frame are you playing. If you are playing the 5 minute, 15 minute, half an hour, 1 hour candle, then of course these down moves like we have seen in the last 2 days are a big down move in that time frame. If you are playing on a daily basis, and after a 15% rise, market has given up 2%, I mean that's nothing really. And if you are even a longer term, you are playing on the weekly time frame, and you are looking at monthly charts or weekly charts, then we've not even had a blip on the larger screen. So it depends upon your perspective, what you are seeking from the market. Are you a very short term, low time frame trader, or are you a longer term investor, or a positional investor trader on a larger time frame? So it all depends upon where you position yourself, and accordingly those trends should make sense to you. So let's say, for instance, at Weekend Investing, if we are doing weekly or monthly based strategies, then these small minor moves don't bother us, because this is something that is just noise right now. I mean, 2 days later market may go up, and you will just forget about this. But larger moves, for instance, just before the Hindenburg report came out, Nifty was at 18,027, something like that, and it had been about flattish for the last uh, 12 13 months. And suddenly after that report, we had the fall from 18 to 40, 18 to 100, going to about 17,400. So about 800 points of rapid fall happened over the next 2 to 3 days. So 4% fall, I mean, is significant for a short term player for sure, but for a longer term player, I mean, 4% fall is uncomfortable but not so bad. And this chart will show you how it has recovered. This was the 4% fall we were just seeing, and it did go back uh, a bit within the next 3 weeks, and then it fell further, about 5 to 6% further down here, and we've recovered since then to 18,400, and now this drop is here. So if you see it from the perspective of where you are, where you have come from, then that will give you the right picture of how and when you should panic, if at all. Uh, Although my belief is that you should be trading or investing in such a way that your exit plan is crystal clear at all times. So you will never panic when you have a plan. See, if you know what to buy, when to buy, how much to buy, and when to sell, if this is clear to you, then there will be no case where you will panic, because you've already figured those cases in your mind, that okay, if this happens I will do this, and if that happens I will do that. So once you have rehearsed your all potential scenarios, then there is no surprise left. If you know that one fine day market may hit a down circuit, and my portfolio will be down 20%, and I'm all right with that. If you internalized that kind of a day in your mind, then the day it happens, you will not be shocked and you will not panic, because you have rehearsed that story in your mind that, if my portfolio is going to crash by 20-30% because of some external reason, I am going to remain invested. Uh, the only people who usually panic are those who have never planned how that trade is going to take place, how that portfolio is going to, how they're going to react to when a portfolio bleeds by X%. And that is a surprise. And in that surprise and in that anxiety, they will take a very hasty decision of either cutting out all position or, adding more or doing things of that kind, which were never in their plan as such. So if you just see the very long term view, this is last 42 years of chart. Every 6 months, 1 year, you will find that there was a crisis of the kind which felt like the world is going to get over. And I'm in for the fall for the long period. Whether it was, you can just read all these. Is just one after the other, whether it was assassinations, whether it was scams, whether it was PMs resigning, whether it was nuclear tests, parliament attack, 9/11 attack, uh, different governments coming in, coming out, Satyam scam, Euro debt, taper tantrum, Greek crisis, oil crisis. So, a lot of narratives, and recently COVID and so on and so forth, Ukraine crisis. A lot of narrative is there in the market that is built to scare everybody. But because the runway of the market is so smooth for India, I mean, I often say this probably very repeatedly in many episodes, that we are so lucky to have this inherent growth in our market, that you don't really have to do anything but to not make major mistakes. If you don't make major mistakes, you will definitely beat inflation and possibly beat index also. The only thing we don't have to do is not make major mistakes. And if you have some basic plan, then you will avoid those rookie mistakes that sometimes one does. So insight basically is markets don't go up linearly at all times. We have to be patient. We have to maneuver through volatility. Indulging in panic selling based on news can be extremely bad for your overall portfolio, because I mean, you could be selling out good positions for a one day fall in the markets. Uh, Rule based non discretionary portfolio, if you're running, don't give any credence to any news. The price will take care of itself. Baba Bhagwan che, the PBC principle. And you need to be peaceful while investing. You need to know what you're doing. And once you know what you're doing, you will be extremely peaceful about it. You will not be anxious about your long term financial goals. So, this is all I had for today's episode. Let me now quickly go see any questions. If you have any, please let me know if you have any questions. I'll try to take them up now. So Vinod has a question on ITC. He says, should I sell here or not? So ITC is a very, very strong chart. They've also delivered, better than expected results. Dividend payout is very strong. So right now is probably not a ideal time to judge whether you have to get out or not, because chartically, if you look at the chart, it's a fantastically strong chart right now. There is no formation where it suggests that we may have topped out. It may have topped out for some time, that is possible, but to suggest that a long term topping out has happened is too early to say that. So let the charts form out, and maybe some pivotal move may happen below which an exit may be recommendable. But for now, I think one should remain invested in that. Next question is from Mr. Ram. He says, "Where should one cut their Nifty if I bought Nifty?" So if you have bought Nifty again for medium to long term, if you bought, for instance, Nifty Bs or something like that, then there is again no reason to panic. Nifty has been consolidating for a year and a half, and usually what happens is that after a long consolidation, you will get a major jump in the market. So the rookie mistake that most investors will do is, if they're stuck in a stock or an index for a long period of time, and then as soon as that stock or an index tries to break out, they will sell it there because they've not seen that price in the last 1 year, 2 year, 3 year, 4 year, 5 year, whatever it may be. But a very long consolidation on any stock and a breakout on that usually will have a very long breakout also. So it will go multifolds from there, or at least go significantly above that. So if you've held through consolidation for a long period of time, uh, one should be more patient and allow that breakout to happen and the next equilibrium to form, where you may want to set up on that. So this is all I had for today. Thank you so much for watching these episodes. Do let us know your feedback, and I will see you in the next one. Thanks. Bye.